with the sales, and they already tallied with the inventory and cost of goods sold. So this provides extra control. Now, things are a little bit more harder when you have cash received by mail, right? So there's a mail room here. So mails are delivered to accounting and cash is delivered to treasurer. So treasurer, as soon as he receives the cash, he deposits with the bank. So accounting department, he records the transaction and he sends those information to the controller, right? So in those that who are responsible to put the money, that customer have paid us the money of 100 yuan. So when the bank statement come, it will be also recorded over there. Okay, according to us, the customer has paid us the cash account and we deposited as well. So when 100 tally, it means basically what are you trying to say here? Those who are responsible for recording and those who are responsible for deposit, so they must be two separate people, right? So you can minimize the chance of fraud. Remember again, those who are responsible for recording, accounting department, they must not given the authority to deposit the cash as well, right? And those who are responsible for depositing the cash, they must not given the authority to record the transactions, right? So that's why it takes a little bit time and also a chain of command because cash is a very sensitive account. Let me clear the mess here and then we see, right? There we go. You see here, so if you see the mail room and you see the check, so check's details are sent to the accounting department and check is transferred to the treasury and they deposit with the bank and they receive a deposit ticket, a receipt, right? So they keep it with themselves, update the system over there, and they immediately when they receive the check, they debit the cash and this information comes to the controller and controller can check that whether the check is deposited with the bank or not because in their books already it is debited, right? Because when you receive check from customers, you receive cash. Cash increase means asset increase. Asset increase mean debit. So that's why here debited to cash. Any question?
Yeah, why is it debit to cash, not cash to debit? Shouldn't it be the other way around?
Yeah, I already told you. So who send you the check? Of course, your customers, right? You have gave them the facility. Either you can come to us and pay us in person the cash, either you can send us a check, right? So they avail the opportunity to send you check and check. There was like a specific box over there, mail room or mailbox. So they put over there. A person who is responsible to check the mailbox, he opened it up and gave you the details. So Mr. X gave you the check. So Mr. X must be your customers. When customers send you the money, what is the entry? Misha, customers send you money.
Debit.
Which two accounts are involved? Cash and customer, right? Customer mean account receivable. So when customer send you money, cash increase and customer paid his dues, customer decrease. So decrease in customer, account receivable means decrease in asset, which is credit. Increase in asset, which is cash, is debit. So that's why they say debited to cash. On the T side, this is a cash debit.
Okay.
You understand, Misha?
Yeah, I get it now.
Okay. Okay, any other question? Sibaday?
So basically, when the customer invoice to the to the financial department. Like the banks, their treasurer and banks are only uh, doing the checks, and accounting department are recording.
Yes. So that's
Oh,
why,
so yeah, depositing and recording.
yes,
Yeah.
because accounting department in a company, it's responsibility to record the transaction and check that the everything is going smooth, right? So like I told you, in dual accounting system, in accrual accounting system, double entry system, one transaction at least hit two accounts, at least hit two accounts. So that also provides a control, right? And like I said, all the transaction pretty much see, all the transactions ultimately affect cash. So that's why when accounting department is recording, so everything is indirectly or directly coming to the cash, right? So this dual entry, or double entry program, the accrual accounting, it gives you many checks, many small checks, which will also provide you a control over the cash, right? And since your cash is deposited with the bank and you are also maintaining cash books, you can always make a reconciliation statement to prove that everything is good. Okay, now controls over payment by checks. So we just saw, or we just studied the controls over cash receipts. Cash receipts can be through mail, through checks, or through transfers. So through payments, so payments can be through checks or through EFT, right? So when you do that, it also provides a control. You pay through check, there's going to be a check number. Who authorized, right? That check will also provide a control. So why you write it down this $1,000 check to that person? There must be a back entry behind that. If it's verified, then it is eligible for withdrawn. Otherwise, it can be a bogus. You can call to the bank that don't honor this check, make it NSF, NFS, or you can just tell that whether this person is deliberately did that, then there is a chance of fraud. So even this EFT, those who are responsible for electronically transfer the fund, they are given the authority because they have their own password. They see the documents. If the documents are approved, then they put the password and transfer to the relevant account, right? So you have seen in your some transaction with the Alipay, right, in China. If you provide some small services, you are going to the different activities, you are given a time that the money will come to you through Alipay. It takes time because payment going to be approved, and then after sending to, for example, my case of claiming the Chumo account, subscription. So I paid instantly, but I would be given back this subscription amount from my university after like 15 days. So now you can think of that, where these 15 days are going to be utilized. So that person who is authorized to allow, they need signature, and that document will go to the finance department. They will also authorize, and that document, after the approval of finance department, will go to the person who is handling the Alipay, right? And when he see the document, and then he transfer to my account. So normally it takes 4 to 5 days, but since the availability, they said that okay, maximum 15 days. Okay, so this also provides a control over cash, so that somebody is not misleading or not writing the checks to favor somebody, or using in a fraudulent activity, right? Because there are official authorized persons who authorize this check, and it provides an evidence as well, right? Nobody can go to the bank and demand money and bank give them. No, bank will keep the record of the check as well. And in electronically funds transfer, there is transaction ID, the time and date, everything is mentioned over there. And also controls over purchase and
Omar, I'm sorry, can you go back to one more slide? Like,
yes.
oh, okay, you can go to the next one. Thank you.
Okay. Now control over purchase and payments. So when you deal with supplier, right? You want to buy raw material, then there is also payment involved, right? So in that case, how you can exercise your control? Number one, fax or email purchase order. It's not like that you call the purchaser and ask him to send you 100,000 tons of steel. That's it. No, you cannot do that. Why? Because before material or before order is booked, you must first circulate purchase order or fax us the purchase order so that this purchase order can be approved from the purchasing department and then from the finance department or accounting department as well. So why we are doing this? Because this also provides us two benefits, whether we are able to pay the money according to the purchase order, we have that money in our bank account or not. Plus, this also gives you a control, right? That from where payments are going to the relevant person or not. So, receive goods and prepare a receiving report. It's not like that. You receive the purchase order and you issued check to the to your supplier. No, when you hand over the check to the supplier, there must be a receiving report of goods as well. That goods are received in your godown or in your warehouse, right? There's gonna be an invoice over there, and all the documents must be approved